All right, so welcome everyone. Thank you for joining. Really appreciate it. And let me just go over the agenda for today. This class, we're not going to talk about the technicals of how these futures markets work in the back end and all those things. The purpose of this class is to get you started with the brokerages, get you started with the basic stuff, some basic understanding on how these contracts move and how much buying power you need to have in order to open or close a futures trade, and how to set proper stop losses and how much money you'll be making or losing per contracts. We're going to talk about execution more than these college level basic stuffs of what futures are and how these moves and all this stuff. So that's the point of this class today. So first things first, I had like a bunch of questions which were asked by the new traders when it relates to futures. The first main question is, what brokerage should I be using to start trading futures? So that is the most common question which I used to get. And let's just start right from there. I'm pretty sure most of you in here use Robinhood. And if you're using Robinhood, we can't trade futures. And I heard that the Webull is bringing in the futures trading down the road. So, but it's not available yet. But if you want to trade futures, I would highly recommend you can either use Thinkorswim. If you already have a account with Thinkorswim, you can use Thinkorswim to trade futures. And there's Charles Schwab. You can use Charles Schwab if you have it, or Tasty Trades has their own brokerage, their own futures trading abilities to do so. I think you have to apply separately in order to get access to these futures contracts to start trading with these futures contracts with the same brokerages. But what I recommend is two brokerages, Trader.Weight or Ninja Trader. So let me just type it in right here so you can just take a note of it and use it down the line. So number one is, I hope you can see my screen, Trader.Weight, Ninja Trader. So these two brokerages I would highly recommend. And there is a reason behind the same as well, because if you use Thinkorswim, or if you use Charles Schwab, or if you use Tasty Trades, the margin requirements which you need to have, the money which you need to be having in your buying power just to open one contract is quite a lot. So, but when it comes to Ninja Trader or Trader.Weight, it's considerably lower, especially if you're planning on starting up with a smaller amount like $500 or $1,000 or $2,000. These two brokerages offers you a much better opportunity to test the waters on rather than trading it with TOS or Charles Schwab or any of these bigger reputed brokerages, which requires you to have like around $10,000, $12,000 to open like one contract. So in these two, Trader.Weight and Ninja Trader, consider Trader.Weight, especially if you are a person who likes to trade through phone by looking at the charts on your screen, or if you want to connect your account with TradingView directly and then trade through TradingView directly, consider Trader.Weight. I would recommend among these two, I would personally recommend Trader.Weight because Ninja Trader is a pain in the ass to set up. It's going to be very difficult to set up, and they don't have any mobile apps for you to trade. So you can't trade through phone. You need a laptop in order to trade, and you need a Windows laptop in order to trade because they don't have that application which is required to trade if you're using a MacBook. So that is another big issue to keep in mind. Trader.Weight is better. So if you want to get started, open an account with Trader.Weight, and that is how you enter into these futures trading world. So that's that. First things first. So if you guys have any questions about the brokerages, let me know, and we'll move on forward talking about how these future contracts move and what all these sticker symbols which you see on my screen actually mean and all those other good stuff. So are we clear on the brokerages? So these two are the brokerages which we need to be looking out for. So let me just put it in the group chat or Zoom chat so you can just like look it up, Trader.Weight and or Ninja Trader. So I just posted the two brokerages which you can open your accounts with in the Zoom chat. So feel free to go ahead, check them out. worth it. And this is what you need to get started with futures. So these are the brokerages. So any questions? We good? All right. So on my screen, you see the stock price moving right now. And this is the futures for what you see right now on my screen is the futures for NASDAQ. And this one, if you're used to trading SPY, this is the futures for S&P 500. And if you like trading IWM, which is Russell 2000, this is the futures for Russell 2000. And if you like trading crude oil, well, this is the futures for CL, crude oil. And this is for Dow Jones. And what you see right now, this is for gold. So all these are futures trading markets. And you can clearly see it's Sunday and the markets are already opened. And the timing is really important, especially if you work on 9 to 5, or especially if you can't focus on the market hours, especially because you're too occupied with your work or your workplace doesn't allow you to look at your phone. Where like there are times where I heard stories like where the folks have to use the restroom to go and open or close their position so that like they can trade when they're at work. You don't have to worry about any of that because the futures market's timing, take a note and write it down. So this is where we start with the good stuff. We open at 6 p.m. EST every evening and then close at 5 p.m. EST the next day, which means today is Sunday. So they already opened. Today is right now at 6:07. The markets open at 6 p.m. EST, Eastern Standard Time, and they close on Monday at 5 p.m. on the evening. And they open back again on Monday, 6 p.m. EST, and trades all the way overnight towards Tuesday evening, 5 p.m. EST. So this is the time. So let's say you can't trade 9 to 5, you have to focus on your work. Most of the people who work 9 to 5 prefer trading after 3 a.m. in the morning because when you 3 a.m. right now for the current time, 3 a.m. is when the markets in Europe opens. For example, like by Europe, what I mean is London, Germany, Italy, France, all these markets open at 3 a.m. EST. That's when these markets open, and that's when you start to get that initial volatility happen when it comes to these types of futures markets. So people who works 9 to 5 prefer to start waking up early and start logging into their brokerage account at 3 a.m. and trade that volatility, and they'll be done trading by like 5 o'clock or whatever it is, and they'll be carrying on with their own day-to-day lives. Doing this way, you don't have to worry about looking at your phone or trading, looking forward to day trading options. Why, when you can't keep an eye out for your charts, when you can't keep an eye out, when you can't focus on the charts or trades that you have, or all this bad stuff which you have been facing so far, can all be eradicated altogether because futures offers you the flexibility to trade whenever you want. Let's say you're working night shift and you can just sleep after coming home, and you can wake up at around like 3 o'clock or like anytime you want in the afternoon, and you can start trading. It's flexible, and that's one of the major advantages. So the time frames which you need, especially if you work 9 to 5, try waking up around like 3 a.m. to 5 a.m. in the morning. So that is when we get that pre-market volatility, when the pre-market opens up at 4 o'clock and the Europe markets opens at 3 o'clock in the morning. That's when you get that initial volatility from the futures. So you can make sure to capture those. You'll see some big spikes and big moves and volatile spikes where like you can make a lot of money on during these types of times. So mark these time zones down. So I don't know what's the equivalent for whichever time zones you're in. So it's 3 a.m. EST is what we're talking about. So you can convert that 3 a.m. EST to whichever time zones you are from. And that's when the European markets open. So if you work 9 to 5, this is the time zones which you take the most advantage of. So number one, flexibilities. So the next question which we ask is like, when, for example, when you trade options, let's say you trade SPY call options or SPY put options, you exactly know how much money you'll be losing if that entire contract goes to dust. For example, let's say on Friday, you open some call options on SPY by spending like $400 on that contract. If SPY just completely collapsed throughout the entirety of the day, what's the maximum money you're going to lose in that trade? $400. So you're paying 400, the trade didn't go in your favor, you lost the 400. How does it work with futures? So the futures doesn't have these types of strike prices. The futures doesn't have these types of expiration dates. They do have expiration dates, but it works completely different as of options. So first, let's start with the advantages of futures compared to that of options, by the way. Have you ever got a call option at the market open and the market just stayed flat throughout the entirety of the day, or put options, doesn't matter. The market just traded flat throughout the entirety of the day, and SPY didn't go up or SPY didn't go down, but your contract still lost like 40% or 50% of their money because of the impact of something called as Greeks, where like you have theta decay, you have delta, you have vega, you have gamma. You need to keep an eye out for all these stuff when it comes to options. And with options, you need to not only be right with the direction, but also be right within the time frame of your expiration date. And that makes options trading a bit pain in the ass to deal with. And this is where the futures have the advantage of their own, because in futures, you don't have to worry about any of these Greeks because it's purely directional. All you need to be worrying about is, did you get the direction right? If you get the direction right, you're going to be making money. If you didn't get the direction right, you're going to be losing money. That's all it is. No Greeks, none of that. None of that nonsense. So that's the first advantage. If you get the direction, if you think that the futures are going to go up, if you think the SPY is going to go up, you just buy a bunch of long options. If SPY goes up, you're going to be making money. If it didn't, you're going to be losing money. It doesn't matter if it takes like 2 days or 3 days or 4 days for it to go up. As long as it keeps going up, you're going to be making money without any effect of theta decay or none of that. Number one advantage. Number two, so there is this thing called pattern day trading rules, right? You need to have $25,000 and above in order to day trade altogether, and all those rules, which is which is protecting you as a trader, but it can also be seen as a major disadvantage because as a day trader, if you want to be a day trader, you're restricted to 3 day trades per week. And that goes for any brokerages, by the way, any brokerages, regardless. If there's a brokerage in US, they are bound to this PDT, pattern day trading rules, which prevents you from taking more than 3 day trades. Futures doesn't have any PDT. You can trade like a million times a day if you want. Wouldn't recommend it, but yeah, you can day trade like a million times a day if you want. You can open, you can close, you can open, you can close, you can open, you can close. Yeah, you'll be paying your brokerage more than what you make, but at the end of the day, it gives you the access to do so. Futures markets are not bound with PDT rules. You can day trade as many times as you want in a single day, regardless of your account size. Another advantage. So now we spoke about advantages, right? So with taxes, that's another one. So the amount of tax that you'll be paying while trading futures is far less compared to that of the taxes that you'll be paying through that of the regular options as well. So that's another added advantage, especially if you're dealing with the larger sized accounts. But for now, we don't have to talk about all these taxes and all those other stuffs, but let's stick to the basics. So these are the major advantages. Now let's talk about the risk of doing the same. We spoke about all the good stuffs, and I'm pretty sure most of you are hyped up in here thinking about, oh my God, a lot of advantages here. Why am I not trading futures? Well, this is why. The problem with the same is, remember how I said, like, if you before you exactly know how much money you're paying or how much money you'll be losing if the trade goes completely against you with options. For example, if it's like $400 worth of call options, and if it completely goes against you, the maximum you'll be losing is the $400. But when it comes to the futures, that's not the case. And this is where we need to discuss about something called as margin requirements. So there's a margin requirement going to tell you how much contracts you can open as per your buying power, and how much buying power you need to have in order to keep these contracts open without getting your entire account liquidated. And before stepping into that, we need to understand how these futures contracts are split. They're split into two. Number one, it's micro. Number two, it's mini. So I hope like you guys took a note of these time zones which we had. Let me just put it above so you can take it away later. And number one, so we're splitting this futures into two micros. The second one is what the hell, mini. So how many of you trade SPX here instead of SPY? I'm pretty sure some people trade SPY, but the larger sized accounts prefer trading SPX instead of SPY. So they both are cash markets. They both have options. You can still trade both. There you go. So we have Tammy trading SPX. Some people prefer trading SPX instead of SPY because the amount of money which they make through SPY won't be enough to compare to the overall portfolio sizes. So they need SPX sort of moves in order to get at least decent amount of gains from a percentage basis. So the contracts are pretty liquid on both SPX and compared to that of SPY, but it's expensive because you're dealing with a $5,258 stock instead of dealing with a $500 stock by trading options on the same. So the options premiums are more expensive with SPX, although it moves exactly the same as SPY. It's just the way these contracts move that makes the major difference. Similar to that, in futures, you have two micro contracts and mini contracts. Minis are the big boys, where like that's the equivalent of you trading SPX. Micros are the equivalent of you trading the same using SPY. So to put it as simple as possible, that's all it is. So micros and minis are split in all the contracts, by the way. So ES has its own mini, which you see right here. This is the mini contracts, ESM 2024. And the same, if you go to MESM 2024, that is the micro. As you can see, the prices stays exactly the same, by the way. There is no big movement when it comes to the prices altogether. The prices stays exactly the same. But the only difference is how much money you'll be making or losing. That's gonna be changing based off of whether you pick micros or you pick mini at the end of the day. So we'll dive a bit deeper into what micros are and what minis are and how these are structured. So right now, let me log into my trading paper trading account at Trader8 so that like we can actually see how these contracts move with mini and micros in real time. So right now, as you can see, the markets are open. We are trading right now. And let me just open one contract. So you can see two of them in here. You can see one buy and you can see sell. What does it mean? So buy refers to you being bullish, which means if you buy one contract, if it goes up, you're going to make money. If it goes down, you're going to lose money. Simple. If it clicks sell, that is equivalent of you buying puts, by the way. What's going to happen? If it goes down, you're going to be making money. You're short. That's what it means. The technical terms is if you sell, you're shorting. If you're buying, you're longing the stock. That's all it means. So right now, you can clearly see you can just put one contract and let's see how these contracts move. Let me just anchor the VWAP to this opening print. So you can just see in real time how these contracts move. So let's buy one contract, no stop losses, nothing. So right now we just bought one mini contract on ES and this is where we need to be discussing about the pip ticks and points. Right now, the ES is trading at what price? 5,258.75 points. That is what ES is trading at right now. So there is something called as tick. There is something called as a point. So let me just tick and point. All right. So when it comes to S&P 500, 1 point means 4 ticks. So each ticks refers to 25-cent move. So if let's say our entry on the same was at 5258.75. So if it moves up 1 point, which is 5259.75, you're going to be making $50. When it is for mini contracts, by the way. For each point, it's $50 or if it goes in your direction, you're going to be making 50. If it didn't go in your direction, you're going to be losing 50. So this is for minis, by the way. Mini contract, this is the rules. So for 1 point, you're going to be making or losing $50. Let's say you entered at 52, 58.75, and it goes up all the way to like 50 to 68, 10 points from your entry. Boom, $500 real quick, in and out sort of thing. So, but if it goes down 10 points, you're going to be losing $500. So for each point move, you'll be making or losing $50 each. Now you can see the movement is not that volatile. We are slowly just chopping around. That is one of the major disadvantage of trading futures when it's like after hours on times like this, because you wouldn't see much of a movement until and unless the VIX is trading at somewhere around 30 points or 40 points. That's not going to happen. So this is why I mentioned the time zones which was given before. This is the time which you need to be looking for opening or closing trades if you are a scalper or a day trader. 3 a.m. to 5 a.m. in the morning or after market open. When you trade these types of times, you're going to find more volatility in the S&P 500 futures or in the NASDAQ futures. So you can capture quick moves and you can just get in and get out sort of thing. So first things first. I hope this makes sense, by the way. For many, when it comes to S&P 500 futures, 1 point yields you $50. If it goes up 1 point, you're going to be making 50. If it goes down 1 point from your entry, you're going to be losing 50 for long positions. So now when it comes to shorting, it's exactly the same. And let me just close this account and you can clearly see right now the price is just consolidating. It's just like one tick under our entry and you can clearly see it's just flat. If it goes up 1 point from our entry, you're going to be making $50. And if it goes down 1 point from our entry, you're going to be losing $50. So now let's just reverse this entire thing and let's just short ES right now. Right now, you can see -1 in here, which means you're short the markets, which means you'll only make money if it goes down in your favor. If it goes down, you're going to be making money. If it goes up, you're going to be losing money. So it's as simple as that. So you don't have to worry about theta decay. You don't have to worry about contracts expiration. You don't have to worry about none of that stuff. As long as you get the direction right, you're going to be making money. If you get the direction wrong, you're going to be losing money. Simple. And for mini contracts, it's $50 per point. 1 point equals 4 ticks. So with that being said, what's the difference between this and mini, by the way? So we spoke about mini right now. So what about micros then? Micros, exactly the same. 1 point, but the only 1 point is 4 ticks. But for every point it moves, you're gonna be making $5 instead of $50. That's the only difference. If it goes up 10 points, you're going to be making $50 instead of $500. But if it goes against you for 10 points, you're just going to be losing $50 on that trade. And this is one of the major reasons why, if you're having a smaller accounts, if you're trading with the smaller accounts, trading with micro contracts can be safer for you, because even if you're wrong, which you will be in 70% of the time when you're scalping futures, you wouldn't be losing a lot of money. Yes, you can make a lot of money if you're right with minis, by the way. But again, the risk is if you're wrong, all it takes is one bad trade to liquidate your entire account. And that's the major difference. When it comes to S&P 500 mini contracts, you'll be making or losing $50 for every point move to the upside or to the downside. When it comes to the micro contracts, you're going to be making or losing 5 points. So that's the major difference between micros and minis, by the way. And now the next question is how much money you need to be having in order to open a mini contract, and how much money you need to be having in order to open a micro contract. And because like you're making a lot of money with mini, which means like you must be putting in a lot of money as well, right? Unfortunately, that's not how it works when it comes to the futures, by the way. And we need to discuss about something called as margin requirements. So what does margin requirements mean? So let's say right now I'm gonna assume that you guys are gonna open an account with TraderWeight or NinjaTrader because the margin requirements changes based off of the brokerages which you use to trade. And right now, I'm going to assume that most of you are going to go with either TraderWeight or NinjaTrader. Both have the same margin requirements regardless. So let's discuss about that. So for mini contracts, so right now you can see it on my screen right now. It's up like $62.50 because we entered at 52.58. Right now, the price is at 52.57.25, which is like $1.25 from our entry to the downside. Now we are up like $62.50. And this is how these contracts move with minis, by the way. So you can see how easy it can get when you're scalping. Yeah, you're going to be wrong most of the time, but it's going to help you out big time to just like, instead of using options, get in, get out. That's what your style of trading. I would highly recommend sticking to trading futures rather than day trading options or whatever it is you guys are doing at the moment. So it's focusing back on the margin requirements. Number one, if you want to open a mini contracts on S&P 500 futures, and I'm going to assume that you guys are going to start trading with a 5,000 or let's say $2,000 account. That's what you're starting to trade with on this, my bad, on this futures account with TraderWeight. So you're starting to trade with a $2,000 account. And if you want to open one contract on mini, you need to have at least $500 in your buying power to open one contract with mini. And if you want to open one contract with micros, you need to have at least $50 in your buying power to open one contract with micros. So what does it mean you need to have at least 500? So let's say like you open one mini contract, you have a $2,000 in buying power. You can open like 4 contracts of mini because you just need to have $500 per contract in your buying power. You can open 4 contracts, but you're so used to trading options. So you open the same with the futures with the mindset that, okay, let me just open 4 contracts because I have like $2,000 in buying power. Because if you're trading the same with options with a $2,000 account, and let's say an option contract is going for like $500, the maximum you'll be making or losing is that $2,000, because if the entire thing goes completely against you, how much will you be losing? You'll be losing that $2,000 because you're wrong and it didn't go in your favor. But when it comes to futures, that's not how it works. You can open 4 contracts, by the way. But again, goes back to the same saying which we used to say, just because you can doesn't mean you should. I'll tell you why. You need to have $500 at least for each contracts which you're holding. Let's say you open 4 contracts at the same time, you need to have at least $2,000 in your buying power. As soon as you open, even if S&P 500 futures drops like 1.25 cents from your entry, your entire account will be liquidated, because it's necessary for you to have at least $2,000 in your buying power in order to sustain those 4 contracts which you're holding. So if you just went ahead and bought like 4 contracts altogether, and as soon as you buy the S&P 500 futures, it drops like almost like 1 point to the downside. It's not a lot. 1 point drop is not a lot, but it's a lot for your account because you just blew through the margin requirements, which is needed for you to keep those 4 contracts open. So what they're going to do is you just lost your entire $2,000 just like that because your account is liquidated. That is the risk. So if you're trading with it, that's one of the major reasons why I said, like, if you're trading with the smaller accounts, sticking to the micros helps better than sticking to the minis, because you need to have $500 in buying power to open one contract. So let's say you open one contract with the same. So right now, you open one mini contract with this $2,000 account. So here's the fun fact about the same thing. Here's the beautiful thing about futures. As mentioned earlier, for every point move, you'll be making or losing $50. So you can be wrong until ES drops like 30 points to the downside. If it drops 30 points, which means you'll lose like what, $1,500. And you need to keep your account above that $500 balance in order to keep this one mini contract active, by the way. That's the margin requirements which is required. For if you want to open one mini contract, you need to have at least $500 in your buying power. Right now you have $2,000, and let's say you open the same and then the ES starts dropping, and then it drops all the way down to like 30 points, and now you lost like 1,500, and now the account is nearing a liquidation point where like you need to keep it above 500. Now you're already down like 1,500 points, and let's say it drops to 31 points to the downside from your entry. You lost your account. It got liquidated and you lost that $500 as well. And this is how these margins work, by the way. So let's say you do the same with one micro contract, which means you just need to have $50 in your buying power to open one contract. Let's say you open one contract of micro instead of spending $500 and opening one contract in mini. If you just spend one contract, you just need to have $50 in your buying power. So you can purchase multiple contracts at the same time with way less risk and make decent amount of money as well. So this is why if you're trading with the smaller accounts, micros are way preferred compared to that of minis. The main reason behind the same is the margin requirements. The amount of money which you need to have in your buying power to have this one contract open is way less when it comes to the micro side compared to that of the mini side. So I knew that I just threw in a lot of stuff all at once. So I'm going to pause it right here and let me know if you guys have any questions on the same margin requirements with ES, because the margin requirements changes based off of the contracts which you're using, by the way, if you're trading NASDAQ, that's going to be a different margin requirements. If you're trading Dow Jones, different margin requirements. If you're trading Russell, different margin requirements. For gold, different margin requirements. So before we move forward, if you guys have any questions about this margin requirements, let me know. So in order to open one contract in mini, you need to have at least $500 in your buying power to open one contract. If you're planning on trading micros, you need to have at least $50 in your buying power to open one contract. Are there fees per contract? Yes, indeed. So you have to pay commissions, unlike your stock. If you're trading with Robinhood, how much do you pay? 0.03, right? So when you're trading with Traderweight, it's $1.25. And can you have a cash account? No. Futures are margin account by default. You don't have a PDT rule on futures. You can trade as many times as you want, regardless of your buying power. You can have a $2,000 account and trade like 100 times a day, get in, get out 100 times a day. They don't have a pattern day trading rule like what you do with your stock account, by the way. They're not bound to these pattern day trading laws like the regular stock accounts which you trade. Why liquidate? Can they make a margin call to deposit more money? Not necessarily. If you're trading with the smaller accounts, they'll give you a one-time warning where like they wouldn't liquidate the final money with whatever you have. But the next time, if you repeat the same thing, what's going to happen is they're just going to liquidate your entire account. The liquidation happens because you already lost your entire account, by the way. That's when the liquidation actually happens. So let's say you're trading, as I said earlier, $2,000 account with one mini contract. You need to have at least $500 in your buying power at all the time. What I mean by that is your account needs to stay above $500 at all times when you're holding those contracts. That's the margin requirements. So let's say you hold one contract and ES just drops like $30 and goes completely against you. Well, you just lost not only like 30 points worth of value in your longs. You can add more money to keep your account above this $500. You can do that. Or they are just going to close your contract because you need to have at least $500 and above. That's what I meant by liquidation. They're going to close your entire contracts, whatever you're holding. So you're not closing it. The brokerage is closing it, so that like they're preventing you from losing way more money. Because in futures, you can lose a lot more money than what you have in your buying power, by the way. So that is something to keep an eye out for. So if you're trading minis, you need to have at least $500 per contract in your buying power. If you're trading micros, you need to have at least $50 in buying power, especially if you're trading S&P 500 futures. Can you keep stop loss? Yes, you do. And let's say you can just drag and drop it right here. And let's say I take this trade and right now I'm setting my stop loss at like 4 points or 3 points from my entry. So if it goes 3 points above my entry, which is like 11 ticks, and I will get stopped out for $137 loss. And let's say I set my take profit target right here once the gap is filled. So let's say they come down to fill this gap. It's going to automatically sell my contracts for $150 in profit. Then if they go up and towards that 52.61, they're going to stop me out for 3-point loss. You can actually trade this way, by the way. You can just open the contracts and walk away. And unlike options, stop losses always hits. If it hits your stop loss targets, it's going to kick you out. You can rely on it, unlike trading options. TraderWeight a part of TradingView? No, it's not. TraderWeight and NinjaTrader, I think they both work together, but TraderWeight is completely different from that of TradingView. But you can link your TradingView through TraderWeight and trade like this by looking at your TradingView screens, by the way. You can right here, as you can see, yeah, I hope this makes sense. So I'll let you guys know how to connect your TraderWeight to TradingView down the line once we near the end of the session. So I hope this makes sense until so far. But when it comes to the margin requirements, what indicators are recommended? We're not going to talk about entries and exits on this class. We'll talk about how to enter and exits down the line. There's a lot of strategies which we can cover. This is just for basics. Can you open an account without depositing funds? Yes, you can. Yes, you can paper trade. We'll discuss about the risks and how to deal with them in the same class down the line. We'll talk about how to open a paper trading account and how to practice and everything. So what other, with either platform, the mini for small account is at 2,000 to open for any account, or you can start. Okay, so you can, if let's say you're starting with a $500 account, you can't trade minis. You have to stick with micros, because if you open one mini, you need to have $500 and above in your buying power. So if you're starting with a $500 account, you can just start with micros. You can buy one micro contract and set your stop losses and trade accordingly, instead of buying minis. Just avoid minis altogether if you're trading with smaller accounts. So we'll discuss more about these account sizing. What kind of data would be required to trade futures? All right. So we'll talk about the real-time data down the road. And for now, does this margin requirements make sense before we move forward? So this is for S&P 500, by the way. So I'm pretty sure not all of you trade SPY. Some of you trade QQQ or NASDAQ. We'll talk about NASDAQ right now. So I hope this makes sense so far when it comes to minis and micros. All of you are asking really good questions, which we will cover down the road. All these questions will be covered down the road, by the way. So we discussed about the S&P 500 futures. Now I'm just going to give you guys the ticker symbol which you need to be looking out for. You can note it down. I'm just going to type it in the Zoom chat. For mini contract, ESM 2024. This is for mini. And if you're trading micro contracts, it's MESM 2024, and this is for micro. And you can only find these ticker symbols on TradingView, and you cannot find this if you're using Webull to trade. You can't find these ticker symbols on Webull, because I don't think it'll be available over there. From last time I checked, maybe they're bringing in futures trading on Webull, so maybe you can find it right now. But these two are the ticker symbol for S&P 500 futures. The M stands for June contract. So just like how you have monthly expirations or weekly expirations or daily expirations on options, futures have quarterly expirations. For example, M stands for June and Z stands for December, H stands for March. And what else we have? And M stands for June as usual. So they have 4 different monthly expirations. And right now, whenever you see MESM, this M right here, that M refers to that of June expiration. And right now, as you can see right here, MESM 2024 and ESM 2024. Whenever you see an M before the ES, which means it's a micro contracts. And I hope these are the two sticker symbols which you need to be looking out for. You can go to the trading view and type this out, and you're going to get the exact same chart which you get on my screen. So, and another thing to add. So when you go to a trading view, you need to purchase real-time data in order to look at these futures markets in real time. If you don't have real-time data, you're going to see a small icon named D next to your future sticker symbol, which means it's telling you that what you're looking at is 15-minute delayed data. So if you want a real-time data, all you got to do is go to your, click on this icon right here on the top left corner of your screen. And you just need to go to your account and billing and then go to the add-on and then just add on that CME tool. If you add on that CME, let me just type it in. You should see something called as CME, real-time data. That's what you need in order to trade futures in real time, in order to get the futures data in real time. I think it's like $4 a month or whatever it is. I believe it's around $4 to $5 a month. So give it a try. If you buy that subscription, it's going to charge you monthly. It's just $4. It pays for itself. It's $4 is absolutely nothing. You're going to get a real-time data on TradingView where you can just observe the futures, and you can practice the same by using paper trading as well, like what you see on my screen right now. You can practice doing the same, and this paper trading is going to give you all the results. You can journal your trade, and you can see all sorts of orders which you opened, and everything is going to show up right here. And this is how you practice using TradingView. And if you don't know how I got this panel, and if you go to TradingView, underneath where you see Stock Screener, Pine Editor, Strategy Tester, and Paper Trading, click on that Trade Panel section. When you click on the Trade Panel section, you'll find a tool called Paper Trading. Click on that, log into the Paper Trading account, and when you just go to trade right here, it's gonna enable you to like open or close contracts. You can set your stop losses on however you want, and you can practice through TradingView directly. So if you don't want to open Tradeaway yet, this is how you practice before you put in your own money at work. And I would recommend paper trading through Tradeaway because the Tradeaway offers better reports, which is going to help you analyze your paper trading trades performances and understand your trade habits way better compared to that of doing this, what you're seeing in front of you. It's going to give you a better understanding of your trade habits and where you're cutting your losses and what your average winners and what your average losses are and all those other stuffs. The Tradeaway offers trading tool with real-time data instead of, yes, it does. Yes, it does. You have to pay for Tradeaway real-time data anyway if you're going to paper trade with Tradeaway. And I have both. So if you're going to connect your Tradeaway to TradingView, you need to have both regardless. So if you're just going to paper trade through Tradeaway, you don't need to have a TradingView real-time data. But if you're planning on connecting your Tradeaway with TradingView, you need to have real-time data on both. So I think it's $9 a month, if I'm not wrong. Not sure. Fresh, how much did you pay for the Tradeaway real time? Is it like what? I believe it's $4 to $5. I'm not sure. I don't believe that it's expensive than that. So this is the margin requirements, and the ticker symbols are mentioned above for S&P 500 futures. And to recap whatever we went through so far, and for minis, 1 point equals $50. For micros, 1 point is $5. If you enter a long position for bullish position, if it goes up like 1 point, you're going to be making 50. If you enter a short position, if it goes down like 1 point, you're going to be making 50 to the downside. So this is for micros. Sorry, this is for minis. When it comes to micros, just divided by 10. Instead of making $50 a point, you're going to be making $5 a point, making or losing $5 a point to the upside or to the downside, depending on if you're long or short. And you don't need to worry about the theta decay. You don't need to be worried about these pattern day trading laws. You don't need to be, you can trade as much as time as you want, as many times as you want. And these are all the advantages. And for the margin requirements, you need to have at least $500 in your buying power in order to keep that one contract open with mini. You need to have at least $50 in your buying power to keep that one contract open with micro. This is for S&P 500 futures. So now let's shift gears to NASDAQ. So the ticker symbols for NASDAQ, I'm going to type it in for both micro and mini, is number one for mini, NQM 2024 for June contracts. This is for mini, and MNQM 2024 for micros. So this is for NASDAQ futures, by the way. So what you see on my screen is, oh my God, what is this? Let me just remove all these indicators. Yep. So what you see on my screen is the NASDAQ futures. This is NQM 2024. The only difference, we're gonna go over the same, what is mini and how these margin requirements are and what micros are and what the margin requirements are and all those good stuff. So let's talk about minis first. So with mini, let's start with margin requirements. You need to have $1,000 in margin. And for example, if you have a $2,000 account, you can open 2 contracts instead of the 4 contracts which you did with S&P 500 futures. But if NQ drops like 1 point to the downside, your account is just got liquidated because your account can't sustain the margins, whatever it's necessary to keep that contracts open. So instead of the $500 which you had with the S&P 500 margins, you need to have $1,000 in your buying power to open 1 mini contract with NASDAQ. The amount of money which you'll be making or losing changes with NASDAQ right here. So for every point move, when it comes to that of the mini, you're going to be making $20. $20 per point move to the upside or to the downside. So I'll show you right now. So let's say we open a trade right here, just with 1 trade, 1 contract. We're going long. So right now, as you can see, if it moves up 1 point from our entry, you're going to be making $20. If it goes down 1 point from your entry, you're going to be losing $20. So that is the contract structures for NQ minis. So right now, and again, the margin requirements is $1,000 per contract. And for mini, for each point, you'll be making or losing $20 to the upside or to the downside. When it comes to micros, it's completely different. So you just need to have $100 in margin to open 1 contract. And for the only another difference is for each point move, instead of making $20, you'll be making $2. So let's say I went long right here on 18,315. Let's say NQ goes up like 10 points from my entry. And if it goes up 10 points with the mini, I'll be making $200. With micros, I'll be making $20. But let's say I take the trade and it goes against me. For like 20 points to the downside or 10 points to the downside. Instead of losing $200, I'll only be losing $20 with the micros. So if you're trading with smaller accounts, trading micros is better. And I wouldn't recommend you guys trading with minis until you have like at least 10,000 to like 15,000 in your buying power. Even at that time, it's still a risky adventure with trading with these types of minis. And if you have like 60,000, 70,000 in your buying power, that makes sense to me. Until then, if you have like $2,000 or 2,500 or 3,000 or $4,000 account, stick to trading micros. Multiple contracts on micros is way better than 1 contract of mini at the end of the day. So something to keep in mind. So this is the difference, by the way. So this is for NASDAQ contracts. For each contract, for each point move, you'll be making or losing 20 points to the upside or 20 points to the downside. For micros, it's 2 points. Right now, as you can see, our entry was at 18,316. It went down like 3 points to the downside to 18,312. And right now it's 2 points down from our entry and we're down like $40. And if it goes higher, for every point move, you're going to be making or losing $20 on this trade. So this is for NASDAQ. And with that being said, so we went over S&P 500, we went over NASDAQ. So if you guys have any questions on these two, on how these contract structures are enabled and how to set up your account and all the stuff, let me know right now before we move on to the next stuff of risk management and stop losses. Are we clear? So the margin requirements, to go over again, the margin requirements for S&P 500 futures are $500 for mini and $50 for micros. And the same with NASDAQ is $1,000 for mini and $100 for micros. So for each point in S&P 500 futures for mini, you'll be making or losing $50. And when it comes to that of the micro, you'll be making or losing $5. That's for S&P 500. For NASDAQ, for each point, you'll be making or losing 20 for mini and making or losing $2 per point when it comes to micros. So these are the basics. So the next things, where will you set your stop loss? That's the important question which a lot of traders have, and that's where you're going to struggle a lot when you start trading futures, by the way. So for now, first things first, you're going to either set too tight of a stop loss, or you're going to have too wide of a stop loss. And both of them are going to bite you right back, because these are the problems which a lot of new traders face when trading futures. Let's talk psychology a bit. They have the ability to trade without any restrictions, because if you're trading with a relatively smaller sized account, you have this restriction of 3-day trades per week. Or even if you have a cash account, you can't trade with unsettled funds. So even if you are trading with $1,000 account, you can trade until that $1,000 is gone. $1,000 of settled funds becomes unsettled. So you can't trade more than that, even if it's a cash account. But with futures, that's not the case. As soon as you sell, those funds will be available to you instantly for another trade. So this is where most of the traders fail, because you don't have any restrictions. You can keep trading over and over and over and over again, and they keep trading over and over and over again, and they just lose everything. Over trading is one of the biggest reasons why most of the traders blow up their accounts when it comes to futures. Don't fall a victim to it. Number one. And number two, when you're opening a contract, always have a stop loss. Always have a stop loss. If you're opening a contract without a stop loss, all it takes is one huge green candle to completely liquidate your entire account, or one nasty red candle to completely wipe out every single thing that you just made. So don't fall trap to that no stop loss, zero or hero, or like lottery, or all those nonsense with these futures trading accounts. You will be ending up paying to your broker if you don't have proper stop losses on. And sometimes, let's say during the non-farm payrolls, where like you saw these types of move, where is it? It's just the 8:30 candle. Yep, right there you go. So let's say like you were long right here with stop losses, or like you didn't set any stop losses on this, and then it just drops altogether like 100 points from your entry. Number one, yeah, they did reverse it altogether completely with that candle close, but it's still a 100-point drop. And by the time they liquidate your account, let's say like your account's already down like $2,000. And because of the high volatile move, it just blew through your stop loss. And now you end up owing your broker to $2,000 or $3,000 because your stop loss didn't kick in as the price was too volatile. So these types of plays as well, this is one of the main reasons why you don't trade these types of news events unless and until you have a proper system in place to trade the same. You don't trade these types of news events. Why? Because if the stop loss gets violated, if the if the futures becomes starting to get too volatile, it's gonna be a real pain in the ass, because you'll be ending up owing your broker rather than you making any money out of it. So those are the risks which you need to be keeping an eye out for: over trading, not setting stop losses, number two. And number three, getting into futures with the mindset of like, oh, this is so easy, I can just make a lot of money real quick. More you trade, more you're going to understand why that is not true in any way, shape, or form. If you suck at trading options, you're going to suck at trading futures. If you suck at trading shares, you're going to suck at trading futures. The problem is not the instrument which you trade. The problem is your risk management behind the same. So when it comes to futures, we had some thorough back testing with a $50,000 account. So if you're interested, with paper trading and go to Tradeaway. Once you open an account with Tradeaway, there should be a separate section called simulated account. That is for a demo account, or we call it, which is where you start paper trading futures contracts. So this is what we call as, okay, like when you're paper trading the futures, I need you guys, before even putting in your own money at risk, I need you guys to take at least 100 trades using the paper trading account. That is what I want you guys to do. Once you have that 100 trades in, let me log into my Tradeaway to show you how that report actually looks like. So you can understand all your good habits, all your bad habits instantly. Let me show. Hold up. Last week. So once you have that 100 trades in your favor, you're gonna get something like this. Let me take a screenshot and let me just post it in the chat right here. Yep. So I just posted the image in your chat. You can just check it out. So that is the screenshot of how many trades you took and how much money you made and how much money you lost. So it's going to tell you your average wins, it's going to give you your average losses, and it's going to give you everything. And in there, you'll see something called as expectancy. What does it tell you? Is for every dollar you're risking, how much dollar you're losing, how much money you're making, or how much money you're losing. Currently, in that picture, expectancy is $14.49. So which means for every dollar you're risking, you're making $14. Sometimes if you're not a profitable trader, you're going to be having a negative expectancy, which means for every dollar you risk, you're going to be losing money instead of making anything. That's going to happen. Why? Because your average winning trade is way less than your average losing trade. Where like in this, the average winning trade is 273, the average losing trade is 221. It's still above the average losing trade. The average winning trade is still above the average losing trade. You can see the expectancy is at $14.49. It's in positive territory. So when you trade using this Tradeaway, it's going to give you an elevated report, an expanded detailed report on where you're losing money and where you're making money and all those other good stuffs. So something to keep in mind, by the way, it's going to help you understand your own trade habits on where you're messing up and where you're like actually doing good. It helps you understand your own behaviors. So this was we are having this sort of experiment with this $50,000 account where like the high risk trade sort of thing. So there's a screenshot which was taken from that high risk. So you can see how risky you can be with the futures. But right now, we only had 20 winning trades, but 22 losing trades. The winning rate is not even like above 50%. Our win rate is 47.62%, but our PNL is still positive. So when it comes to these types of trading futures, instead of focusing on win rates, instead of focusing on like, oh, I have to win all the time, focus on if you lose, losing less. If you're winning like 3 times of your stop losses and profits. That's what you need to be focusing on if you're scalping with futures. Trading futures is not about winning all the time. Trading futures is about if you're losing, lose less, cut it quick if you're wrong. If you're making money, the money which you're making should be at least 3 times higher than that of the money which you lost prior. Let's say like you took like 10 trades. Every trade you got stopped out on, you lost like $100. But let's say you just won like 3 trades. If you're winning on 3 trades, you should be making at least $300 on each trade which you won, which is 3 times your stop loss or 3 times your average losing trades, whatever you had so far. Even with a win rate of like 30%, you are still in positive territory, profitable territory. So when it comes to trading futures, you're going to be having a good control on your risk. For example, right here, if I just open a buy option right here, you buy a contract right here, you can just set your stop losses under and you can just set your take profit right here and you can just walk away. If you're right, you're going to be making money. If you're wrong, you're going to get a notification that you got stopped out. So that is how you deal with these types of futures, by the way. And if you're so used to trading SPY on QQQ options, especially if you're day trading options with SPY or QQQ, you're going to find this way more helpful and way more advantageous and way more flexible, especially if you're working 9 to 5 and can't keep an eye out for these types of charts every single time when you're at work. You can just wake up early in the morning and start trading and make your money and then just get to work. And if you get good at it, you'll be having technically two jobs. In the morning, you wake up to trade and you'll be getting paid with the futures account, whatever you're handling. And then you go to 9 to 5 and you can just focus on your work right there and your work alone instead of looking at your charts or Discord chats to see what the hell is going on. So something to keep in mind. So to recap, the brokerages which are recommended are Tradeaway and NinjaTrader. So those are the two brokerages which I would personally recommend, especially if you're starting to trade with the smaller accounts or if you want to do paper trading. And these are the two brokerages which are preferable, Tradeaway and NinjaTrader. And if you are going to start trading futures, open a simulated account with TradingView, with Tradeaway, and start paper trading until you finish at least 100 trades. You need to have at least 100 trades. You need to take at least 100 trades. And when you're trading with a paper trading account, let's say you're planning on putting in $2,000 of your real money, paper trade with $2,000. Paper trade with the amount of money which you are planning on trading with on your real money account. Do not paper trade with a $50,000 account when you're planning on just starting out with $2,000. That's not how it works. So you're not going to be learning anything because you're not going to be dealing with a $50,000 account. You're going to be dealing with a $2,000 account. You need to be practicing for a $2,000 account. And that is how you learn about your habits, you learn about your risk-taking abilities, and that is how you learn about all these stuffs, by the way. Trading with a $50,000 account is not going to teach you anything on how to trade with a $2,000 account, by the way, because you'll be looking at it from a standpoint of how to take risk with a $50,000 and not how to take risk with $2,000. So modify your account balance to suit the amount of money which you're planning on putting in. That is going to help you practice for the amount of money that you're planning on putting in down the road, rather than some superficial money which you might or might not make using the paper trading account down the line, by the way. So something to keep in mind. So with that being said, how did you put that on again? Are you talking about the stop loss or whatever it is I had? If you're using TradingView, this is a TradingView. I just opened it so that I can show you guys how it works. So if you go to the paper trading, let me just start over so that I can. Okay, so right now, let me just gonna start. I'm just gonna start over so that you guys can see how it really works with TradingView. Okay, follow my cursor underneath. Do you see something called as trading panel? You'll find it if you're following me through the browser. So the trading panel, click on it, and then there should be something called as paper trading in there. So click on paper trading and click on connect. And once you connect, you'll be good to go, and you'll be having your account balance right here. And you can change this account balance if you want, and you can do all sorts of stuff with the same thing. And you should find something called as trade. Click on trade. And right now, you can either set a stop loss or take profit before entering the trade, or you can set it after entering the trade as well. But I would highly recommend setting it before entering the same. Right now, I set my take profits at 18,366.50. I set my stop losses at 18,297.50. Let me just click on buy right here. So they just opened one contract for me with the profit taking target at 18,367 and stop loss at 18,297, which means, let's say, like right now the price of MNQ is at 18,316. If it drops all the way down towards 18,297, I'm going to get kicked out for a $375 loss. And if it goes all the way to 18,366, I'm going to be making $1,000. So you can just open a trade and you can just walk away and you're going to get notified. And you can move your stop losses to these higher lows depending on what the market does, by the way. You can do this in real time. So we just moved your stop losses to 18,305. And if it breaks under 18,305, we're going to get kicked out for a $215 loss. If it continues to keep pushing higher, we can just keep moving our stop losses higher and higher and higher and keep capturing the money, whatever we made. So this is a paper trading account, by the way. This is not a real account. This is not a real money. So I just want to put that out there. So this is a paper trading account just to show you guys how things work. So if you're practicing, you can practice with these types of accounts, and then you can connect your account with TraderWeight and or TradingView, and you can just trade accordingly. Quarterly expirations applies only to micro. No, it applies for minis and micros, both altogether. Quarterly expirations for S&P 500 futures altogether. That goes for both minis and micros. All right, so with that being said, these are the basics. As I mentioned earlier, the point of this class is to get you guys started. Get you guys started with what brokerages you need and how to open a contract, how to close a contract, how these contracts move, and how does the pricing work, and how much money you'll be making, how much money you'll be losing, and how to set stop losses on the same. That's the point. So we didn't go in depth on anything. So before that, we need to discuss a bit about prop firms when it comes to futures. We're like trading with someone else's money, trading with a company's money rather than your own. So once you paper trade, once you get familiar, I would highly recommend you guys to take a test with these prop firms so that like they have this certain exams which you need to take. And if you satisfy, let's say like they'll give you a $25,000 account to trade and with a trailing drawdown of 1,500 and the profit goal of 1,500. And if you make $1,500, you pass the exams and they will fund you. They will fund you for your account. So you can trade through the prop firms as well instead of trading with your own money once you get better. I wouldn't recommend you guys opening any prop firm account if you're a beginner to futures. That will be a waste of money. Paper trade for at least 100 trades until you understand your own behaviors. Right now, as you can see, we went long on 16s and the price moved up like 10 points from our entry. And there you go, boom, $200 easy. And this is something to understand on how these contracts move. And we risk like $200 on this trade. We had our stop losses and you can just set it and walk away. And if it works in your favor, great. If it doesn't, you'd exactly know how much you're going to lose. You can just walk away. And if it gets to like 13,366 by and down the road, you exactly know how much you'll be making as well. So these are the type of like, especially if you're working 9 to 5 and if you can't trade during market hours, I would highly recommend looking into futures. And especially if you're profitable and if you're finding struggle trading during the markets, you can swing trade shares. You can just open and you can just see the price before getting to work. And if there is no changes needed, you can just go to work and you can wake up early in the morning and day trade or scalp futures. And you can use options as a way to protect your swing trading shares rather than as a tool to day trade or do whatever the hell you guys are doing with options, buying and selling of. Yeah, so use futures to scalp, use options to protect your swing trading shares from downside risks, use shares to swing trade. You cannot beat that combo if you have a proper risk management and position sizing. So something to keep in mind, by the way. So if you guys have any questions, I'll give you guys access to unmute yourself and let me know so we can have a discussion. If you guys have any questions, you guys are good to go. Let me know, we can discuss about the same. And the ticker symbols, if you guys are interested, these are all the ticker symbols which you need to keep an eye out for. ESM 2024 for, I'm just type it out. And if you want to, I'll just take a screenshot of it and I'll just post it right there. Be easier for you guys to just. I would highly recommend getting a TradingView account. Do not, I don't see any point of using Webull or any of this nonsense which has no utilities whatsoever. The more you learn, you gotta expand your charting softwares or whatever you have. TradingView is better. And yes, if you guys want to live trade futures with me every morning, and feel free to join the early morning sessions. We live trade NQ right over there every morning during our sessions. And if you're not ready yet, it's fine. You can trade QQQ alongside with me when we are trading NQ. Every morning at 9 o'clock, 9 to 9:15, we will be live, and we'll be live until like what time? Usually it goes until 10:30 or 11. So we'll be done for the day by that time. So feel free to join during those times. We'll live day trade NQ futures over there, and you can get in, get out with us. And instead of using that as a tool to like looking for trades, you can use that as a tool to like understand what makes us enter a trade or what makes us exit a trade. So all this are going to help you out big time down the road. And what prop firms do you recommend? Shameless plug. I would highly recommend Apex because that's what I use. And if you use this code and get in, we both get 15%. So how about that? Sounds good, huh? Yeah, but I use Apex. Jokes aside, so I use Apex trading, and it's pretty solid. I like it. I enjoy it. Not because I'm affiliated with them, but that's the only thing which I've used so far, and I find it useful. It's ease of access, and some use Topstep as well to be transparent, and some find Topstep useful. And you'll be facing this thing called trailing threshold when it comes to that of Apex prop firms, which means they'll give you a $25,000 account to trade with a 1,500 live threshold drawdown and a profit target of 1,500. So let's say tomorrow you take a trade with that account and then you make like $100. Right now your account is at 25,100. So your trailing drawdown initially, which was at 1,500, now it will be at 25,100 minus 1,500. So it will be 1,500 from whatever peak your account just hit. So let's say you made $200 the next day. So your account will be at 25,300. So it's $1,500 from this high point of your account. So that 1,500 will be keep on following you higher and higher and higher the more your account grow until you hit the profit taking target of 1,500, by the way. So if you hit your goal without blowing up your account, without dropping it like 1,500, well, they're going to fund you. And that's how these types of prop firms work. But before even you getting into there, I would highly recommend, as mentioned earlier, paper trade at least 100 trades. Feel free to join us. Join us tomorrow morning, and we'll be doing live trading sessions every morning from 9 o'clock all the way to 11 o'clock. Observe how we trade, and that might help you out big time. And when it comes to a lot of questions about what entry strategy you use, what exit strategy you use when it comes to trading futures, all I can say is, okay, before I go on a rant about how entries doesn't matter and all that other bullshit. So number one, look into the strategy called ORB, opening range break. So that's something which I use when it comes to trading futures. Let me send out a video on the same on what ORB actually means. ORB refers to, I just posted a video. Where is it? Let me see. Analysis brainstorm, learning. Yep, there you go. Yep. So check this video out. So this is what we call as opening range breaks. For example, we're going to wait for the first 5 minutes of the market open. So as you can see right here, I'm just going to close this position. So I already know. So right now, when the first 5-minute candle, you mark the highs of that candle and you mark the lows of that candle, and you're going to wait for the price to get back above this range to long it, or below, or test this range or below this range to short it. Right here, as you can see, this is on a 5-minute time frame, by the way, because backtesting wise that resulted in a better risk return. So if you short it right here, once they broke under this 5-minute candle range with the stop losses set right here at the highs of the day, that is what they mean with the opening range break. And you could have done the same thing on this is something which we took on live sessions, by the way, on last Friday. If you add the highs of the candle on the first 5 minutes on the 9:30 candle right here. So once they broke above this range right here on NQ, you long it right there with stop losses set right here at the lows of that 5-minute candle. After that, it never looked back. It never came back all the way down to 18,171, and they went as high as 18,400, by the way. So this is how you take advantage of something called as opening range break. And technically, you can use ORB in combination with the VWAP to yield you better results. But again, these entry strategies, exit strategies are not going to help you become profitable. It's going to help you get good trades here and there. But what's going to help you become profitable is tripling your winning trades, and cutting your losing trades short real quick. That is what's going to keep you on this game, especially if you're taking that scalping route where like you're not going to be opening or closing a position, holding on to a positions more than 1 minute. And this is a 10-second chart, by the way, on the same NQ which you're holding. So I'm not saying look at this 10-second chart and then trade based off of 10-second charts. No, I'm not saying that at all. But it's going to give you a better understanding of how the price reacts around the VWAP. And especially if you're taking on the scalping route, it's going to give you a better understanding. If you go to the 1 minute, it's not going to tell you much. But right here, it tells you clearly, okay, they broke under the VWAP right here. And you can just take a short with stop losses at the highs of the day and ride it all the way back down, sort of thing. It's going to help you understand how the price is reacting around the VWAP even better. This is a 10-second chart, and you can see price how they came in contact with it and then completely rejected, and now they're pulling back down the road. And there's a lot of entry strategies out there which you can follow to take your trades on. And I just posted a video on something called as opening range breaks. And it doesn't matter if you're trading stocks, doesn't matter if you're trading options, or it doesn't matter what you're trading, what instruments you're using to trade. This ORB is going to help you out big time when it comes to analyzing the entries and exits, especially if you're a trader who doesn't trade the first 5 minutes of the markets. You can wait for the first 5-minute candle to close and mark the highs of that first 5-minute candle and mark the lows of that first 5-minute candle. And if you see the lows getting taken out, short the breakdown under. And if you see the highs getting taken out, long the breakouts higher with the stop losses at the recent lows. And trading this way over and over and over again and again and again, after 100 trades down the road, it's going to yield you better results. Something to keep in mind. So that being said, thank you so much for tuning in. And I understand we just skimmed through a lot of things, but tune in with us tomorrow morning in the live trading session. And you will, once you start to see how these things work, you're going to find it way more understandable, right? Rather than right now. I'm pretty sure you guys have some questions. And if you have, feel free to reach out, and I would be more than happy to help you guys out. Or join us tomorrow morning. We can trade right there live. When you see us trade right there live, it's going to answer a lot of questions on its own. That being said, thank you so much for tuning in. I really appreciate it. And have a great rest of the weekend. Take care.